Hello everyone and welcome back to our latest episode of Real Talk, where we talk about real situations that happen to real people that can sometimes be real uncomfortable. My name is Tom with Crandall and Associates, and today we are going to be talking about limited liability companies and residential properties. Now, I'm not here to tell you whether or not you need to set up an LLC for any type of rental properties or what have you. All I'm here to say is that I've seen a trend lately in people buying second homes or even rental houses and putting them in an LLC name. Typically, clients do not ask their insurance agent what type of insurance implications that has. And so that's what we're going to talk about today. When you have a personal policy, any type of residential policy or structure will typically go on a residential form. However, once you start naming those properties in LLCs, that's where it can tend to get a little hairy because the carriers do not like that. They think it's more of a business exposure than it is an actual personal exposure. So if you are going to put an LLC onto your rental property or what have you, in order for the standard companies, as we call them, and I won't bore you all with that today, but just know that standard companies' premiums, the coverage is better, and typically the premium is lower than what we call surplus lines or non-admitted lines. So if you do have an LLC with your residential property, as long as that LLC solely owns that property, they do not have any other type of business operations, they don't own any kind of commercial properties or anything like that, your admitted companies most of the time will be okay with adding that entity onto the residential policy so long as that LLC is made up of either just you personally or solely family members. When you have an LLC that also has other operations, such as commercial operations, or that LLC is owned in multiple people's names that are not family or related, that's where things can get a little tricky. And most carriers are not willing to add that entity onto the policy, and we have to go into surplus lines in order to do that. Just for a specific example here, one of my clients is purchasing a home and they're probably going to spend about $1,000 more per year in insurance just because they put it in the name of an LLC. So chat with your attorneys about it. There's always a cost benefit analysis to everything, but it may be more advantageous for you in the long run, especially if you plan to own that property for a long time, to separate it out from any other LLCs you may have. Or making sure that it's only consistent of family members, whatever the case may be. All I'm trying to say here is either way is fine. I'm not the attorney to tell you to do it or do not, but I am telling you that there are insurance implications, so be sure to talk to your agent before you think about setting up entities for residential properties and all that jazz. So that's all I had for you guys today. Thanks so much for joining us, and stay tuned for next month's episode.